Thanks for joining us. I'm Marlon Bowling with you. We're watching your ag commodity trade on a Tuesday, the day after we got our final crop progress and condition reports from USDA. And they did, in fact, show the harvest progress on corn at 95% complete. The 5-year average is 98%. That's it. No more reports the rest of the year as far as crop progress or condition goes. In fact, soybeans, they didn't even mention this time around. They just assumed that for all intents and purposes, except for maybe a few remaining double crop acres, soybean harvest is done. Cotton harvest at 79% complete versus a 5-year average of 80%. Grain and sorghum coming down the home stretch at 95% done. Sunflowers 93% done right now. Let's find out what's going on the grain trade today. Let's go to the trading floor in Chicago and welcome our guest analyst. This time around, we have none other than Mr. Todd Bubba Horwitz of BubbaTrading.com. There he is. And what's going on the trading floor today? Seems kind of quiet on the grains here.
Good morning, Marlon. It is extremely quiet, and it's been this way for weeks or maybe even months, and it doesn't figure to get much busier now. Of course, all the news is out that might affect it, and of course, now it's about the money and about the flow, and of course, the commercials are still trying to squeeze these down, and they're pushing hard, trying to push the prices lower. But I think at some point here we'll find a bottom and start to move higher. I certainly would not be a seller here. I'd only be a buyer, which I am and I have been. So I'll continue to be a buyer at these levels. I think that we're going to find some support, and we could see a nice little rally. Maybe Santa Claus will show up for the grains as well.
Talk to me about the commitment of traders numbers that came out last night, or late yesterday anyway. They continue to show the corn position by the large funds still very net short, right?
Yeah, they're still trying to short, and of course, I think this is one of the issues that you would look at from a speculator standpoint, is they've been pushing hard for months trying to really break these down, and they have really not been able to successfully break it. We dribble down, but that's because there's no money flowing around right now because the equities are still going higher. But based on the amount of pressure they've tried to put on, we should be even significantly lower than we are right now. And I don't see that, which means to me that there's a rally brewing underneath the surface, and that's why I'm pretty confident that we'll see a pretty good rally.
Let's look at our prices right now. We'll go to the corn board in Chicago and see where December and March and associated contracts are trading. That December, remember that goes into delivery here day after tomorrow, first notice day coming up. It is down 1 3/4. We have the March down 1 3/4 at $3.50 per bushel, over a penny lower all across the board on the corn. On the soybean side, we have the January contract down 6.5 now at $9.89.5, getting further away from that $10 mark now after breaching it here a day or two ago. We have the March down 6 3/4 at $10.01, getting close to $10 again, and July down 6 1/4 at $10.19 1/4. Wheat trade in Chicago wheat, we have the December board down a penny at $4.08.5, and March down a penny at $4.27 1/4. Kansas City wheat, we have the December contract there a penny 1/4 lower at $4.06 per bushel. March down a penny 1/4 at $4.24, only one tick from our low of the day on both of those. Minneapolis wheat here on spring wheat trade, we have December currently down 5 at $6.05 per bushel, one tick from its low of the day. July down 4 at $6.33. That is now on its low of the day. And on the cotton market right now, here we have the December up 92 at 73.07, but that one is already in delivery. And now we have the March contract up 28 points at 71.70 cents per pound. Todd, I want to bring you back here in a little bit and get your thoughts on what's developing here in this livestock trade. Lots of stuff going on there to talk about. We'll have more with Todd when we come back. Talking with Todd Bubba Horwitz of BubbaTrading.com. He is located at the edge of the trading floor right there in Chicago. And I want to talk a little livestock market action now, Todd, and the cattle market coming under a little bit of pressure here today after a firm close yesterday. And it was kind of a surprising close yesterday where it opened up weaker on the day and then it gradually drifted higher and turned into fairly impressive gains. at the end of the session yesterday. So what's going on now? Why the weakness here?
Well, I believe the weakness is warranted, especially in the feeders, but I think the fats look pretty good, but they should probably trade down to about 124, and then I would like to be, once again, a buyer. I think we'd go higher in fats. I think feeders are still a little bit overpriced here, and I think that before I can see higher prices, I'm looking for 148. Now, we got close a week ago Monday, but now we're back trying to rally, but I thought 155 was a pretty good level to sell, and the highest I saw was 154.92. So I think they're going to go lower. But again, remember, we've still got lack of action here as well. So one of the things you have to be concerned about is the lack of order flow, the lack of money flowing in and out of these markets, which can give one order, could drive them farther than you would think it might go at any one time. And that's this time of year, extremely quiet. And then if you tie in the fact that everything else is rallying, then it makes it even more consistent that, you know, we could see anything happen here. And that's why it's time to be very cautious when you're getting involved.
How complicated did the holiday make it for the packers and their buying patterns here on the cattle and the hogs?
I don't think it was much complicated. I mean, you know, we know what the holidays are. We're kind of, you know, everybody's kind of prepared for that. You know, I used to go through that back in the day when I was working in the meat house, and of course, it's not. You're already preparing for that, so you're building for those days well ahead of time. I don't think it really changes any of the dynamics. I think the biggest thing is the economy is in a little bit of trouble, I think, and I think that's what might create some of this lack of interest and maybe some selling pressure that we might see soon.
Okay, let's talk about this lean hog market here that left a gap on the charts over the Thanksgiving holiday. It came back Friday and it gapped above where we were Wednesday on the close. Then we came back Monday, closed higher again. And then we came back today. And, you know, the old saying used to be you fill a gap in 3 days or 3 weeks. And it's not doing it today, is it?
No, but I think that, again, I think what you're looking here is, again, the thin trade leads to these type of trading atmospheres. I think that lean hogs are probably a pretty good sale up about here around 71. When I walked up here, they were 70, 75. I would be looking for a spot to see a little bit of a pullback. I don't see this big rally continuing. I think they're probably a little bit overdone for now. Again, a lot of things have to happen, and a lot of these technical patterns have to work together before I would like to see higher prices. Overall, longer term, I see higher prices across the board. But in the short term, I think we've got some work to do to the short side, and at least feeders and hogs.
Todd, good stuff. Thanks a bunch. I appreciate it. Todd Horwitz is with BubbaTrading.com in Chicago. Here's a rundown of our futures trade. Let's go to the board and take a look. Let's look at our live cattle board here first. And right now on the prices, we have the December contract now trading 54 lower at 119.28 per hundredweight. And we have February down 80 cents. We're now quoted at 125.25 per hundredweight. That's about 90 cents off our high of the day. We have April down 90 at 125.95. Meanwhile, on the feeder cattle market, let's take a look over there. We have the January 35 lower at 154.10 per hundred, and we have March down 52 at 152.03. So the weakness continuing here across the board. Meanwhile, let's take a look at our lean hog trade, and right now you have your December futures hanging in there. They're 13 higher at 64.65 per hundred. How about February? 50 higher at 70.60, and that gap still remains intact. Now 55 higher at 70.65. We are 25 cents from our high of the day, the April up 67 at 74.75. So, Christina, that's a look at our livestock trade. You have a very special guest.
Indeed, we do. Thank you so much, Markets Editor Marlon Bull.